Sam, it's good to see you.
Thanks for having me.
Thanks for coming in. Let's first get to, I guess, kind of the proximate cause of this sort of backstop that Oaktree came in with, this $600 million loss. Your reporting is saying that this does not seem as if it was simply meant to hedge a pending acquisition that fell apart.
That's right. A couple years ago, we wrote a big picture story about UWM.
Yes.
The biggest mortgage lender in America, founded on what we called a lie. The idea that there were these independent mortgage brokers who were going to shop around for the best loan. And the reality was that a lot of these independent mortgage brokers were captive by UWM. They sent all of their business to UWM. In the years since, Ishbia has essentially raided UWM for his dream of running this NBA team, the Phoenix Suns.
Right.
And what we've found is that he got the company to essentially the brink in recent months, and they were in a very back against the wall situation. So he made a $21 billion bet on the idea that interest rates would fall. Mm-hmm. And as you know, they haven't.
Right.
And that's why UWM ended up on the verge of what could have been a bankruptcy.
Just to be clear, when you say, he kind of raided the company, I mean, through dividends mostly, I guess, to all shareholders, which he was a big beneficiary of?
He owned about 90% of the company.
Yeah.
So he collected billions of dollars worth of dividends. He was selling shares in UWM this year all the way down. It was a $3 stock. And he'd gone public in the first place in order to fund his purchase of the Phoenix Suns. And he did that with a margin loan against his stake in the company. And so, yes, he took billions and billions and billions of dollars out of the company and then didn't slowly unwind his dividend. It then just stopped.
Yeah.
And you might be thinking, how did he get away with this?
Right.
His board was his brother, Justin, his dad, Jeff, and Isaiah Thomas,
right,
the Knicks
NBA Hall of
general manager who ruined my childhood, but also clearly can't be trusted to manage it.
I mean, obviously, yes, it's a kind of a closely controlled company. But just in terms of this $600 million loss, so they did have this pending acquisition. Two Harbors was the name of the company. It ended up being acquired elsewhere, have an agreement to be acquired elsewhere. And UWM has said that they were essentially hedging the interest rate exposure of that potential acquisition. Your reporting says what?
It says, one, that Two Harbors already hedged its book of MSRs. He was acquiring both the MSRs and the hedges. Mm-hmm. Two, Ishbia sued Two Harbors and claimed damages. He did not include this big loss in that lawsuit, which I think tells you a lot. And then, fundamentally, it's just outrageous to think that he would have needed a $21 billion bet when Two Harbors itself, over that same period of time, barely lost any money at all on its MSR book. Mm-hmm. So it doesn't really pass the smell test. And I think at this point, the burden of proof is on UWM and Matt Ishbia when they're telling people something, because for years, the truth has been a long way from what Ishbia claimed.
All right. Well, you mentioned a couple of years ago you had that initial story. It was sort of based on some other things, but that was when the stock was, I think, around $7. So clearly it's been much lower along the way here through various issues, as you detail here. Sam, it's great to have you come in. Thank you very much.
Thanks for having me.
Sam Koppelman of Hunter.